I'm Mike Arrington from Arrington Capital, and this is Joe Lubin. Anybody not know who Joe Lubin is? First time I met Joe. Real? Oh, Joe, why don't you tell a little bit about yourself? I've known you since 18, I think. We first met
Since we were 18?
No, since 2018.
Yeah.
Or 17.
Something like that, yeah. Sure. Hi, I'm Joe. I work at a company called Consensys. Consensys builds lots of the infrastructure for the Ethereum ecosystem. We think of Consensys as Ethereum first, but because we publish a wallet called MetaMask, we're a pan-blockchain ecosystem company as well.
We're going to talk about a lot today, but I'd love to start out with macro because it might just sort of, what's going on in the world. It might frame our discussion a little bit. What do you think about the Middle East? Who's going to win?
Who's going to win? Hopefully the world wins.
Yeah.
Hopefully clear heads will prevail. Hopefully there will be rational considerations rather than eschatological considerations. So there's a lot of factors going on. Some of them are economic, geopolitical, spiritual, religious, etc. And I do think that there is a chance that if we are all very fortunate, especially people in the region, it's possible that Iran is able to shift their perspective sufficiently so they become a welcome member of the Middle East community, and then the region turns into a region of milk and honey and for the next millennia.
Yeah,
it's the center of the world, and
it is.
And economically, it should be very strong.
Have you read the book?
A lot of ships go through that area.
Yeah, well, not so many now. But have you read the book, The Fourth Turning?
I've read parts of The Fourth Turning, and there's a new book. The Fourth Turning is here, and I've listened to lots of Neil Howe podcasts, and when Bill Strauss was around, lots of that stuff. So it's a very powerful framework for understanding why we are in the end of a super cycle, what that super cycle is all about, and I don't know that it says that much about what the next super cycle is going to be about, but you and I can explore that.
Yeah.
Have you read, familiar with lots of that material?
Have I done what?
Are you familiar with lots of that material?
Yeah, I'm paranoid. I have a paranoid personality, and so that stuff speaks to me. But I think I'd be surprised if peace broke out in the Middle East, but, who knows?
Good point. I think we're going to move through a very complicated period. So end of a super cycle means that there's this theory that Strauss and Howe shared around generations, around this idea that there's an 80 to 100-year super cycle consisting of 4 generations. One way to think of it is as sort of hard times create strong men create good times create weak men create hard times. But it's more sophisticated and complicated than that. And the super cycle that we're in runs through 4 turnings. The first turning essentially happened at the end of the World War II, where America came out of that war as the only viable military and industrial base on the planet. And so they were able to write the rules of the rules-based order for the super cycle that we're in. And the first generation of the first turning represents a new social contract, a new system of the world, a new hope, etc. Second one just grows that. The third one, you sort of see the cracks emerging in society and the economy. Technology gets really powerful and enables people to cheat and start stealing better and fooling people, etc. And then all hell breaks loose by the 4th generation, and the system in the world just careens into a brick wall and smashes apart. But while all that's happening, you've got different technologists, different philosophies, etc., forming and maturing and growing. And so my thesis is that the next super cycle will consist in the early phases of decentralized protocols and hybrid human-machine intelligence.
That was a pro move. You just segued right back into the topics we want to talk about, like perfectly. I will say that for somebody who claims to have only skimmed the book, you seem to know quite a bit about this. So
I watch podcasts.
yeah,
I watch YouTube.
it's a great book. You guys should read it if you haven't. Fourth Turning.
Yeah, the supercycle stuff is also mirrored by Ray Dalio from a pure monetary and debt perspective. So this is the end of a monetary regime as well. There's like a guy named Peter Turchin who has a thesis that supercycles that sort of map onto these supercycles are actually produced by an overabundance of elite, meaning there are just too many talented, gifted people for to fit into the powerful positions of society, and so they're twiddling their thumbs, they're spinning up OpenClaw or other things, and they're trying to figure out how they can get their rightful share as the the nature of the economy shifts.
Yep. Okay. We'll come back to the Middle East a little bit, but more on a crypto topic. But to start things off with, we've been through some cycles. I think people in this room have been through, hopefully you've been through some cycles in crypto. To me, something feels different right now. It's not a fear and greed issue that we had in 2022, for example. It just feels like a lack of enthusiasm issue. And it might be AI is sucking all the air out of the room. But what do you think about that? Do you think I'm wrong or right? And then how do we fix that?
Yeah, I think you're right. There's a lot of things going on simultaneously, but I think what you're pointing at is as a disillusionment or disenchantment in the crypto ecosystem proper, where the degens don't feel like, hey, we are the vanguard and it's all about us, and we're creating a new society. We're exiting the old society. We're creating a new society where it'll be DAOs and unicorns everywhere. I think that's fine. I think that there were a lot of philosophical forces and factors starting in 2008, 2009, when decentralized protocols were unleashed onto the world. And a major characteristic of at least the Ethereum ecosystem and the blockchain ecosystem is innovation. But we have been an extremely immature technology for a long time because it's really hard to take a world that's been operating for millennia based on top-down command and control and trust imbued by authorities into intermediaries and sort of shared via these ledgers, these centralized databases who or which basically record who owns what and who has what rights and privileges. So trying to shift from that to bottom-up trust, where everything is legible, permissionless. You can upload your applications or your data or your assets to this decentralized global ledger, and you're flipping the trust vector of the world. Centralized trust is really capricious or selfishness involved, control involved. Bottom-up, decentralized objective trust is a much better form of trust. And so we have this idealistic way of thinking about reformatting the world. And now suddenly, as our technology starts to collide with the real world in the form of traditional finance, in the form of machine intelligence, which I wouldn't call the traditional world, but it's a major factor. Suddenly we have to figure out how we can keep this idealistic dream of building decentralization-based societies alive, and I think that's going to continue to grow and flourish. But also, how do we bring 400 years of financial innovation in traditional finance onto 10, 15 years of decentralized protocol and decentralized finance innovation, and really bring these worlds together and create a much more unified world where the shenanigans, shall we call them, of geopolitics and finance. We've largely been, or retail's largely been fleeced by sophisticated financial actors since it started. So how do we bring all that together and enable the good actors in traditional finance to make use of better technology and build better systems? And so it's not surprising to see that people who loved DeFi and NFTs and the good forms of meme coins, it's not surprising to feel like, hey, wait, what about us? Are $4 trillion worth of native digital assets going to get totally trampled by the $700 trillion of more traditional public securities? And yes, they are, by the way.
You've said in the past, unless I'm misquoting you, that you think DeFi is structurally safer than TradFi. Is that DeFi is structurally? Can you explain what you mean by that, and if you still agree with yourself?
Did I say that? When did I say that?
My notes say you did.
Okay,
let's go with it.
Let's go with that. If I said that, what I would have meant was that our ecosystem has been immature for a long time, and it is getting more and more hardened, more and more mature. If you think about the different exploits, because of all the great security, smart contract auditing that we've been doing, there are much fewer exploits that happen in a smart contract context or on protocol. Most of them happen between seat and keyboard, or at centralized exchanges, things like that, in multi-sig things. So it's the humans that are the weak points. So we still have a lot of work to go, but I think Vitalik articulated 9 months, 12 months ago that if you look at the fact that we're at the end of a super cycle, that financial systems and monetary systems are inflating, cratering, financial repression is a mechanism that is designed to enable governments to spend freshly minted money and harm the interests, the purchasing power of most of the population that can't hold assets that hold their value. That in that context, it may be safer in many parts of the world to put your money in a blue chip DeFi protocol or a vault that is carefully managed by a curator, rather than putting all your capital into some of the many banks in the world, in some of the many nations in the world that are rapidly eroding purchasing power.
Okay.
So I guess I was right.
Fair enough. But when we talk about decentralization, we look at like what happened to ETH in 2016 when it split, instead of, something more drastic. But, with Arbitrum and the Kelp hack, they've Arbitrum froze ETH. Is it even DeFi anymore? And also we were talking about Iran, and you had mentioned the US has several $100 million of crypto of theirs that they've taken recently in stable coins. Both Tether and Circle aided them in that. I don't know, is this DeFi anymore, or is it just a Frankenstein monster?
Certainly DeFi. There's a lot of DeFi in what you just articulated. I think your question is, how much decentralization is appropriate in which applications or which use cases, and how much decentralization is appropriate or necessary in the global stack, the global financial stack.
Yes, but also you remember back in the day, purists, if something happened like a hack, it wasn't considered necessarily an illegal or immoral act. It was simply the protocol doing what the protocol was programmed to do, right? And that, those days seem long gone now. The idea of freezing assets, and even turning back chains seems to be more understood now. So that flavor as well, but yes, you understood the question.
So you're talking about opinions of different actors, not accepted wisdom, and there are different tribes and factions in our ecosystem. So if you look at the Bitcoin maximalists who understand that for a long time, Bitcoin has been finished and perfect, and didn't agree or wouldn't admit that all human constructs are situated in a social construct, essentially, and you can't really, like physics is maybe not situated in, even physics is situated in a social construct, because Bitcoin, interestingly, has come to face the reality that that if quantum computers become viable very soon, that what they projected as inviolable is actually something that they need to consider, because they, Bitcoiners were crypto anarchists and were mostly focused on protecting their financial interests. And if something comes in and threatens that, then yes, it's okay to upgrade the protocol.
You just painted Bitcoiners with a broad brush. I'm going to let all that
Well,
go.
I did. But
It's
you,
fair enough.
You painted our whole ecosystem with a broad brush. I'm going to
I absolutely
going to get to other
yeah,
tribes. Yeah. So the Ethereum, different Ethereum tribes, some of them were crypto anarchists. Some of them we all came out of the Bitcoin space, essentially. And with the DAO, we faced this dilemma, which was basically the Bitcoin philosophy versus what I would call the more native Ethereum philosophy, where Ethereum was more focused on building a platform, a decentralized platform for decentralized applications. And that's something that needs to keep evolving, that has huge surface area. And so the fact that Ethereum at layer 1 remains rigorously decentralized and must, in order to preserve credible neutrality and censorship resistance, that's a social construct. That's something that we have to be vigilant about and maintain.
In this case, we were talking about Arbitrum, which is not the L1.
And so
interesting.
So the world needs an national, decentralized source of truth and trust at the base level, and Bitcoin is one of those, and Ethereum is one of those, and those are the only two rigorously decentralized, for some definition of the word rigorously. And then above that, you can have sufficiently decentralized platforms. So stable coins or genius compliant stable coins are a certain class, but then properly decentralized stable coins, like certain forms of DAI and liquidity and size. So we need more of those rigorously decentralized stable coins that are based on Ether or Bitcoin, because we actually don't want to be rug pulled by President AOC if they come into power and they decide that the different government agencies can make life difficult on stablecoin users, potentially, and on up the stack. So there are lots of corpo chains. There are lots of layer 2s, and each of these have different degrees of trust inherited from layer 1, and different degrees of governance, or different kinds of governance. So we're going to build Web3 as an extension of Web2. We're going to migrate a lot of Web2 onto Web3, onto decentralized rails, and much of the economy onto that. And it's going to look in different ways, like geopolitics, like national borders, like economic regions, like supply chain situations. And so, you need people governing lots of things.
I think you gave me a great answer to that. All right, MetaMask. MetaMask is, you said it's not a neobank. I thought it was a neobank.
It's definitely not your grandfather's neobank.
Yeah.
So it's a new kind of neobank. So MetaMask started life.
It's a neobank.
You wanted me to say that. I wasn't going to say it.
You wouldn't give it to me.
I wouldn't.
Yeah.
I'm sorry.
All right.
But I gave it to you back there then.
Say it now.
Neobank. It's a new kind of neobank.
Tell us about it.
Okay. So MetaMask started life as a sort of digital authority tool, where you could go to different websites, Web3 websites.
When did you launch MetaMask?
I think 2016.
Okay. I think 17 or 18 was when I first started using it.
Yeah.
And it's
Thank you.
much different now, but yeah,
Yeah,
go ahead.
it's very different. So it started as your digital authority wand, where you can go to different sites and you can basically sign transactions, sign messages, and it evolved into more of a wallet, more of a portfolio management tool, and now it's a pretty full service new kind of neobank that you can own and you can control. We publish it. We make it perpetually available to use for free. There are some value-added services that we charge for. So we charge for swapping and some other stuff. It now can enable you to access perpetuals, equity perps, hyperliquid, prediction markets. We have a debit card that is incredibly cool because instead of sending your salary, basically sending your paycheck to your bank so you can use your debit card, you can take your paycheck and you can deposit it into an account in MetaMask and put it into DeFi instantly. And the minute you buy dinner or something using your debit card on the MasterCard network, get a little money swept out of that. So you're earning.
Do you use it?
Absolutely.
Do you have it in your wallet right now?
I have it in my wallet. Yeah.
Okay.
I'll show it to you after. I got the medal.
Oh no, I'm going to choose to believe you. I'm sure you use it. Yeah.
Do you want to get it? It's pretty beautiful.
Now you feel like you've been challenged?
No, I just want to take the opportunity to just show it to people. I think it's down there. Thanks. It's also heavy metal format, and so if you start attacking me, I could defend myself.
Here, hand me your mic. I'll hold it for you. It's a nice bag.
Thank you.
Okay, let me see it. Oh, that's pretty.
Isn't it gorgeous?
It is really, really cool. Yeah, I don't know if you guys can all see it, but
Pass my credit card around. Don't spend more than 100 stable USDs. Thanks.
Okay, so but where does MetaMask?
Let me finish up. So MetaMask is doing beautifully. We're in a sort of low energy market. Brian Armstrong mentioned that on Twitter, I think yesterday, or maybe this morning. But MetaMask is holding market share and growing market share, and it's basically because we've been shipping incredibly quickly, and so we also have a rewards program that is driving a lot of engagement. So MetaMask is the largest self-custody neobank or wallet, and it is has call it the largest distribution in our ecosystem. And so we're able to use our rewards platform with distribution to enable high quality protocols, layer ones, layer twos, DeFi protocols to give us tokens that we can share with our users and incentivize them to participate.
All right, what about AI though in MetaMask? I mean, right now the agents are using mostly TradFi, do you think, or no, to make payments? Where's it going? I guess.
So the agents are starting to make payments, and with respect to MetaMask proper, because it's a privacy tool, because it's it's got the best security Lindy in the ecosystem, we want to be very cautious. And so we've been doing things using machine intelligence in our customer success group for a very long time, with great success. People actually love talking to the machine agents, and we hand off to the humans who are also really great.
But there's nothing stopping agents from using MetaMask now. They probably are.
So a lot of agents are using MetaMask right now.
Yeah.
And so they can do it in different ways. They can do it by actually looking at the user interface and simulating pressing buttons. They can do it by using our API, and we're fleshing out our APIs so that everything you can do in the extension wallet or the mobile wallet, you can do programmatically. We have something called the delegation framework and the delegation toolkit, which enables. So if you gave MetaMask access to your wallet and you made all these really strict instructions, do not expose the private key, do not spend more than your allowance of 100 units. There are lots of things that can happen that would cause your agent to ignore.
Where the money's gone.
So compaction of memory, things like that. You can say, do not do X, and the do not part gets compacted into something else, and it just goes ahead and does that.
And it's gone.
And it's gone. So our delegation framework enables, as a delegation manager and a smart contract component and an off-chain component, and you can basically delegate rights, permissions, assets to an agent, either within your wallet, within an account in your wallet, or you can give them their own wallet, and it's transitive, so they can be set up with rigorous guardrails, so they can't do anything that they're not supposed to do, but they can also do the same thing if you want to create a claw crunch swarm. You decide you want to get, this investing stuff is getting boring. You want to get back to building things. You don't like people that much.
All that's true.
And so you could just build your own company with a bunch of different agents. And these agents can actually work through their teams, and they can allocate resources for.
But it's important
for
for you that MetaMask is a key player in this industry, right? With agents. I mean, you said that much in the past.
Yeah. So, it's important to us that MetaMask is a key player in this industry, period. And we think that that the interface to machine intelligence, back to what the next super cycle is going to look like, we need, in the same way that we need different levels of decentralization in our blockchain ecosystem proper, we also need different levels of decentralization in society. And society is going to start to look like a hybrid human machine intelligent organism.
Seem pretty optimistic.
I'm very optimistic. But finishing that point, we need our access to be as decentralized as possible. Our interfaces to the web and to the world should be under our control. Mark, Sergey, Larry, Elon, etc. They do lots of good things for the world, but they shouldn't own and control and manipulate and bias the interfaces, the feeds that we receive. And so with decentralized hardware, so Apple's doing a really good job on AI hardware with systems like either Gemma from Gemini, where you can load it into your phone, you can load it into your browser, and you can have your own large language model. I still think the centralized brain trust, Claude and OpenAI and Gemini, etc., I think that's really important, and they should keep pouring huge amounts of capital into that, because it enables us to have these narrative engines that are really great, and stochastic prediction of the next word or image or something like that. All that is really great, but those things hallucinate all the time. We need sense making. We need humans in the loop, and so MetaMask will play an important part of being part of our user interface to the world. So yes, we will likely, when we're comfortable that it's safe, we'll likely have a digital twin coordinator agent, either inside MetaMask or interfacing with MetaMask, that can essentially be our alter ego, our partner, doing our bidding on the web and in the world.
Cool. We're a couple minutes over. Do you want us to wrap up, or talk about DATs for a couple minutes? Is there anybody here with any authority to make these decisions? All right, we're going to have one last question on DATs.
Ask for forgiveness later, maybe.
Nobody's jumping up and down. I'm so sorry. I didn't even note your existence.
We got 1 minute.
Now. Okay, we have 1 minute. So, Esbet, you have failed to fuck it up. Like, a lot of the debts are in a lot of trouble. You guys seem to be pretty good. You don't need debt, right? And you're chairman of this.
Zero.
Yeah.
Yeah, zero leverage.
What have you done right besides the leverage?
What have we done right? Well, we chose a token that's a really good token. A lot of those other DATs made like silly mistakes. So the nature of innovation in our ecosystem is come up with a great idea, buy lots of tokens backing up that idea, or equity backing up that idea, and then the copycats come in and they fuck up the idea, and then the exploiters come in and they just destroy the idea for a little bit. But we still have the innovation. So it's tokenization, it's consensus algorithms, it's DeFi, it's NFTs, etc. So we go through these ways of irrational exuberance and crash over and over. But we still have these primitives that are really great that we can use as appropriate in the future. And so we chose the right token. We raised $3 billion. We brought in a truly spectacular team. We've staked all of it, nearly all of it. We're finding ways to get higher yielding sleeves above the base 3%. And we're patient. So we understand that the price of the equity will be highly correlated to the price of the underlying token. And we are permanent capital, permanent long-term.
Is the company running
capital.
profitably if you consider the revenue being the staking revenue and all that? Yeah, good. All right.
So the next surge, which is happening right now, surge that'll cause the NAV to go up, and the ATM will.
See, there's a lot to be like hopeful for right now.
So the Ethereum DATs are great. Michael Saylor's DAT is great. So I think there are three shining examples currently. I think the DAT is an important primitive. So
interesting.
DeFi protocols, any protocol that has a strong token or a strong value proposition, I think it does make sense to have that hybrid capital markets, traditional capital markets, and tokenization.
You guys have done some stock buybacks, right?
Yes.
Yeah, and that's I think a big reason why MNAV seems to be healthier. The ones that have. Do you even announce those, or you just do them? Right?
Yeah, we announce them.
Yeah. All right, we're out of time. You're fantastic.
This was fun.
I'm fantastic.
You are. You're the best. You're the best moderator.
This was by far the best panel of the event. And thank you so much. And thanks to all of you.
I feel like I'm in the All In podcast.